Hey guys, it's Hunter Baldwin here, and today we're going to dig in on how to find real supply and demand. Whether you call it order blocks, supply and demand, support and resistance, price action, institutional footprints, it doesn't really matter, it's all the same thing. And today we're going to dig in on how you can find these areas and how you can get the best entries and how you can maximize your profit. So stay tuned. What's up guys, Hunter back with another video, and today we're going to be talking about supply and demand. So I just want to briefly cover this topic because we're going to make a series about supply and demand and how you can use it to get better entries, understand where the market is going before most people know it, how to spot potential reversals, and of course how to make more money. So let's just get right into it. We can look at pretty much any pair that we want and use examples, but before I get into that, I just want to briefly address how there's a few different names for supply and demand, how people use different names. So where I believe it originated from was this man called Wyckoff. So maybe people have heard of Wyckoff theory, maybe you haven't, but that's where supply and demand, I believe, originally came from, and it was like a long time ago from a man who was investing in stocks, I believe. And he basically talked about how there were, the composite man, or the man who had like a bunch of knowledge, and compared to like retail, and you could tell that they would move the market by these big moves and blah 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 blah, and we'll get more into that later. But there's also the infamous ICT, whether you want to talk about order blocks and all the stuff that he teaches, it's literally essentially the same thing. You have institutional footprints, which is kind of similar, support and resistance, price action, all these different names. Okay, so now that we got that out of the way and we kind of know it's all similar, some of them might be a little bit different, but it's all relatively similar. Let's pick something. Okay, yeah, we'll look at the yen. So the yen is a good example. I already have some of this stuff marked out. But essentially, when you think of supply, think of it as just selling. So it's an area where the market is more than likely going to sell from, meaning it will go down. If you have an area of demand, that means the market is more than likely going to push up from that level, meaning price will go up from a specific level. So this is a pretty good example of supply and demand. We have supply down here in these boxes, and we have demand down here and supply up here. Now, why are these, let me just clear this off. Why are these areas specifically are areas of supply and demand? Well, the reason that they are is because, as you can see from this area right here where price started to slow down, and that's important, price started to slow down, and you see all these wicks. You see a little bit of bigger candles pushing down right here, but then again you see these wicks, price starting to slow down. It's really indecisive, and then out of nowhere we get this big candle that's just pushing super hard. That's how you know this is not a retail candle. This is institutions piling in and buying in at the same time. Now what ends up happening is these institutions, they can't fill all their orders all at once. So it leaves something called imbalances. And what the imbalance is basically whenever you're trying to do a big position, if there's not enough sellers, it can leave orders down here that never got filled because there weren't enough sellers. So if price comes back down to one of these areas and there's a bunch of unfilled orders from when these people were trying to all buy in, then when it comes down to touch here, it's going to blast off as well. So the way that you can look at it, there's a couple different ways to look at, like for example right here we're looking at demand. You never are going to know where the orders are realistically. Sometimes in an accumulation it will retrace very far down. Sometimes, in this example, it went to what I would call basically the top of the accumulation. And as you can see, this is a weekly chart, but as you can see, it pushed past all of this, right? And then hit this little line perfectly, and then took off again for a few weeks before having any type of retracement at all. So this is very important. You'll never know where the orders are, but you have an idea that where the accumulation is starting from essentially is fair game for potential unfilled, a big amount of unfilled orders to be here, and that price could potentially push off. Now again, price could retrace further down into like an area down here, but as you can see, most of the orders got filled right here. A lot of orders got filled right here, caused a push for a few weeks. Then the supply side, so the sellers were so strong by the time it got down here, which I'm sure there were some unfilled orders, but by the time it got down here, it didn't care about that because there weren't enough orders to push this higher until we literally broke the low. So that's a little bit different, but once we broke the low, then we pushed a little bit higher. So hopefully that's not confusing, but generally you want to start to look at supply where the big push happened from, and an important thing to look at is where did this accumulation begin at. Now something I also want to touch on is you'll notice that I'm on the higher time frame. So this is a weekly chart. It's not like I started on, the 4-hour chart. Supply and demand, it will work on lower time frames as well, but the thing is if you don't have the higher time frame context, then you're really trading without a lot of information, and you're trading kind of blind. It's not to say that it can't work, but you're really limiting your vision. So I'm trying to think of an example. So this isn't a big push down, but let's just say that you were like, oh my god, here's a supply zone right here because this is where a big push down happened, right? Like from this area is where it went all the way down here. Now, once it comes up here, it's supply, right? Let me sell. If you sold right here, it would go down a minimal amount, and then you would get taken out, and you would lose money, and then you would hate yourself. So it's best to stick to the higher time frames, especially looking for your the point of origin, where this is beginning at. That's super important. You don't want to start on a lower time frame unless you want to day trade, but again, you're gonna have limited vision, and it's in my opinion not a good way to start an analysis. So stick with the higher time frame. Um, Now again, here's another example right here. This is a supply zone, so now we can look at the sell side. But as you can tell, falling, falling, falling. Okay, now price rises a little bit. We're pretty indecisive, but this right here is an accumulation as well. If you see price do this where it's kind of like slowly going up and then you have a big drop like that, there's orders that are sitting in there. So like, let's just use this real quick. Like if we get rid of what's to the left and we just look here. So, and this could even be, yeah, like look at the monthly. So when you look at the monthly candle, it becomes more apparent, right? When we're falling, 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 and then we get this stop, you want to pay attention. And again, notice how I'm on a higher time frame. This is a monthly. So when you look at this, it's very clear cut that price stopped here for an obvious reason. There's an accumulation happening here, or I guess since we're talking about the sell side, there's a distribution occurring. So when this price falls, you want to look for where this accumulation started from. Now that's not to say that price can't come here, right? It's not to say that it can't come here, because as we'll look in a second, it actually does, and it still reacts from this level. So just because the orders got filled here doesn't mean eventually once we get up to the higher level that there's not orders stuck there and that will push price lower. So this is a perfect example of sell side supply. So this is when you know, like, hey, we want to start thinking about selling. And from this area, what do you know? It touches it perfectly, taps into there, and then starts to take off. And from a lower time frame perspective, it's very similar in the way it works. So it's creating supply on a 16-hour, for example, and this is when you can start to go to the lower time frame. When you get into a supply zone on the higher time frame, or a demand zone on the higher time frame, then you can start to go lower. You know what I mean? And an example of this would be, look, we have a big candle right here. This candle starts to get smaller, big wick, and then what do we see? We see a big push right here. You can do it from the wicks or the body. If you want to be safer, you can start from the wick. That's fine, but personally, I like to start from the body of the candle. And what do you know? It pushes. Look how price pushes into this zone really fast and then falls off really quickly. So this is exactly what we're talking about. And let's get rid of the replay real quick. So it actually doesn't take out the high. It might have tapped it like right on it, but you see again how from this zone and level it holds, and then this is where price falls from. So I think this is a good place to stop. I think we've given a pretty good idea of supply and demand. Yeah, I think we've given a pretty solid idea of what supply and demand is. Again, this is where the accumulation started. Price immediately pushes past. And yeah, so I think that's where we'll stop. We didn't talk about the demand as much, but it's pretty much the same thing, just vice versa from supply. So this will be part 1 in the series. And I think what I'm going to do is, as I'm trading, try to give live examples of things that are happening as they're happening, so you can see what's going on exactly, and show you actually the trades that I'll be taking, like live trades on a funded account and stuff like that, so you can kind of see how it works. Now, supply and demand isn't the only thing that I use, but this is the I guess you could just say this is what I use to get my entries. So there's other factors as well, but we won't cover that right now. So thank you guys for watching. If you liked it, share it, give it a like, subscribe, and all that bullshit. But anyway, thank you guys for watching. Stay tuned for part 2. That will come out whenever we get into an actual trade and give you a live example and show you the thought process as the trade is playing out. So thank you guys very much, and I'll see you in the next one. Peace.